Hey, and welcome to another segment by Freyman CPA. Good day, YouTube. Today we're going to discuss hobby loss rules and what are hobby losses. So you might be wondering, how is this important? How does it relate to me? Well, if you're in business and you're conducting business as a Schedule C owner or a sole proprietor, this is a must-see segment for you. Now, when we're dealing with hobby losses, it's almost like a presumption more than it is an activity, if you know what I mean. So, in other words, when we think about hobbies, we think about somebody doing some arts and crafts, or maybe like horse riding or something along these lines, where they're not really in business, right? So that's what a hobby technically is. It's something I do that I have passion for, that I like doing, and it doesn't necessarily have any kind of profit motive, right? So how is this important? Why does it relate to business is a great question. So basically, what ends up happening if, for example, you start your hobby and you're conducting that hobby already for profit. And say, for example, I really like pet collars, and I'm obsessed with pet collars, and everything I do deals with these pet collars. And I'm gonna say one day, well, I like creating them, and it seems to be catching on, and many people are asking me about my pet collars, and let me start selling it to the store. And I'm gonna go and form an LLC, and all of a sudden I'm in business. Let me take all those losses and deduct it from the income that I have that I'm earning from other sources. Do you see the gray area? That's the issue that the IRS has. Millions of people go out there, start a business, and will generate losses, and then will eventually deduct those losses from their other income, and they can call it a business. So that's why the IRS is very interested in businesses that create losses year after year, and basically will challenge those losses and call it a hobby. And for tax purposes, hobby losses are not deductible. Now, so let's go back a few steps. What are the hobby loss rules, and what happened before the TCJA enactment of 2018? Basically, back in the day, before we had this reform, if you had hobby losses, they were deductible up to the hobby income. So hobby income, let's say you earned hobby income of $200, and you had expenses, so this was your income, and you had expenses of, let's say, $300, you could not take $300. You would only be able to use $200 to offset your $200 worth of that's the worst $200. So it would look more like limitation, right? So limit would be $200 in expenses. So you would actually get zero. And you wouldn't be able to deduct anything against your other income. Other income like W-2, your dividends, your capital gains, any other types of income, pass-through income, right? You wouldn't be able to deduct the net loss. So your net loss would not be able to offset any other types of income. Remember, the basic formula for accounting is you have income less expenses equals profit or loss. And we call that net income or net loss for accounting purposes, right? So you guys have all heard about that. You're all well versed in that terminology, so I won't dive into more of that. But that was basically the way the law stood back before the reform, and it mimicked gambling. Gambling was the same idea. Basically, your gambling income was deductible up to the gambling, your gambling losses were deductible up to the gambling income, because otherwise anybody that would go into a casino, win $100 or what have you, would be able to declare a bunch of losses that were accrued from gambling all year long. And that's basically what ended up happening was, the law is smart. So it said, well, if you won $100 worth of casino money and you spent $200 worth of casino, spend, all you can do is up to that gambling winning. So that's basically the same idea as the hobby loss rules, because that's how the tax law works, because otherwise everybody would say that they constantly lose money at the track or where have you, and would start writing off all these losses against all this other income. Came along TCJA and said, wait a minute, so here's your hobby income, and let's say you had hobby income of $1,000, okay? So this is the income. Then let's say you had expenses, which were your costs of goods sold, and the abbreviation for that, or the acronym for that, is COGS, C-O-G-S, or cost of goods sold, was, let's say, minus $200. Your gross profit, as we call it, from this activity, from your hobby, ended up to be $800, right? But then you had these other expenses that you've incurred for doing your hobby activity. All right, and those expenses were, for example, utilities, maybe insurance, right? Maybe some professional fees, and so on, right? Because you can literally have a bunch of different, you can have even some taxes, all sorts of things. And all of these, let's say they added up to $300. So the reform said you cannot take this. The reform said all you can take is this. That's how the reform works. And it said no to this in very plain English. Not fair. Doesn't seem fair. Because if my hobby's producing income, I want to write off everything I can. Unfortunately, that doesn't work that way. And this can be found, so the allowance, so actually, right, so the law was more favorable back in the day. Before the TCJA, you were able to deduct all of it. Now, what's ending up, what actually happens with people with hobbies is they actually can only deduct the cost of goods sold, so they end up with taxable income, where before the TCJA, they would be able to write off all associated expenses and wipe out any potential income, right? And for some people, this could be a substantial amount of money in tax. The hobby expenses are all disallowed technically, but the cost of goods sold is still allowed under IRS regulation 1.183-1 sub E. And that regulation states that a taxpayer may determine gross income from any activity by subtracting the cost of goods sold from the gross receipts, so long as he consistently does so and follows generally accepted methods of accounting in determining such gross income. Hobby expenses are no longer deductible under TCJA, even on a Schedule A, as such as itemized deductions. Okay, but costs of goods sold are always deductible, subject to gross income limits. Now, this is the same regulation that allows for marijuana business to deduct costs of goods sold, even though the activity is still treated as an illegal trafficking activity for federal tax law purposes. So if you're in the marijuana business, you can't deduct anything but the cost of goods sold. And that's, again, that's still allowed under this regulation. All right, so now that you understand what hobbies are, the next segment will discuss, are you in business? And are you in business, or do you have a hobby? What the IRS looks at, and what happens if the IRS pulls you over into an audit? What are the 9 factors that the IRS looks at to determine if you're in business or if you have a hobby for tax purposes? We'll discuss the rules that determines whether you're in it for profit, and we'll go over what an appeals case might look like. Thank you again for your time today, YouTube, and I look forward to speaking with you more about this very interesting and controversial topic.